None of us. Anyway, here are a couple things you need to know to kick off your day. On the economic agenda this morning, the third and final reading for second quarter GDP came in at a decline of 0.6%. And guys, I think this probably already confirms what Julie was talking about just in the markets, just continued downturn in markets, investors scared about the economic slowdown getting worse. How can it get any better in this current quarter when rates are higher than they were in the second and first quarter?
Right. And then the larger implication of a longer extended contraction in GDP, that particularly is going to be something that consumers are paying closer attention to over time, even if the confidence is not necessarily waning like we thought it would. We got a better than expected consumer confidence reading earlier this week. It's a larger question of how that will kind of throw off, if we can use this term, the vibes more broadly when you've got more consumers that are paying close attention to GDP, and where potentially that also nets out for the rest of the economic considerations. However, as of right now, if we're kind of parsing this with the market activity and that bitty bounce that we saw yesterday, I mean, that's probably not going to be extended too much into today, considering the futures. We'll see exactly where things open and end. But looking through some of those basic sectors that would really be looked at as defensive plays right now, the necessities even, that's where I continue to kind of keep my eyes on, because in energy, communication services, these necessities that people need, that's so directly correlated with GDP as well. That's exactly where the consumer is going to have to continue to pay, but at what prices are they going to pay over an extended period of time too?
Right. Are we going to continue to see these elevated inflation readings? Got to look at all of these capitulation signals that people were looking for over the past couple of days ahead of yesterday's bounce, right? Bernstein folks are looking at one sentiment indicator that they created that's a proprietary indicator, and they said another bear market rally is very possible because investor sentiment has reached such negative levels. And we're hearing, sort of signs of that from Wall Street, that we could see a bounce from these levels. We don't know how long that bounce could last.
What would be the
right?
catalyst be? It's hard to see.
Sometimes there's no catalyst,
It just
right?
happens.
It just happens that the
relief,
selling sort of
perhaps.
exhausts itself, right? And people decide that something is priced in. So sometimes, yes, I usually ask that question too. What's the catalyst?
I was trying to be you.
But now I've been doing this.
Playing the other side.
But now I've been doing this long enough that I know sometimes there's no clear catalyst.
It just happens.
Yeah, and I mean,
what was the catalyst for yesterday?
Well, I thought the Bank of England stepping in, buying bonds, that led to a market rally. But look at the close, and then look at our open. I mean, the futures today have gotten completely not off the rail. I'm looking at Dow futures on our site now, down over 300 points, and it's ugly.
Well, it's the solid reminder too that the markets are going to price in the actuality of something happening or occurring well before that event actually takes place. Now, the reality of that on the other side is too, we don't know exactly when the depths or the kind of hardest impacts from a recession would be felt from a consumer perspective and a business perspective too. And so now the markets are doing the best that they can to adequately kind of, if you will, kind of correlate to what that move would look like in the future. And how far out? Well, we've been talking about mid-2023 at this point with some of our guests.
It's going to be a terrifying earnings season. I just said it. It's going to be terrifying. We'll talk about some movers later.
Either that or they are. Everyone who was going to come
Apple
out with terrible news already pre-announced it, and the earnings season will be fine.
It's terrible. Awful.
No?
Save the date. Today. It's going to be awful earnings season. Guidance, everything,
All right,
awful.
we'll see.